Housing is 33.1% of the average American household budget in 2026, the largest single line item, bigger than food, transportation, and healthcare combined. And it has grown every year since 2020. The number most Americans feel but cannot name, $961. That is the monthly increase in housing cost since 2020. Rents up $600 per month, cumulative, per totality. Mortgage payments up from $1,100 to $2,061, a $961 monthly increase per bank rate and MBA. Same roof, dramatically different bill. Median monthly mortgage payment in February 2026, $2,061. Median monthly rent, $1,843. A $218 gap, but that mortgage requires $111,252 annual income to qualify, per Redfin. Median household income, $62,600 per BLS. The shortfall, $48,652 per year. Since 2020, rents increased 32%, adding roughly $600 per month per totality and multi-housing news. That is $7,200 more per year for the same unit that rented for $600 less just 6 years ago. National average rent in February 2026, $1,843 per month per Zillow ZORI. In 2020, roughly $1,400. A $443 monthly increase that compounds every lease renewal with no mechanism to reverse it. Renters cannot negotiate the cumulative 32%. Buyers cannot reach the $111,252 income threshold. Both face the same root problem. Housing costs rose faster than incomes for 6 consecutive years, and the gap has not closed. $1,100 per month in 2020. $2,061 in 2026. The line nearly doubles in 6 years. No dip after 2022. No correction after 2024. The buyer who waited is still waiting and paying rent in the meantime. The doubling is rates and prices moving simultaneously. Median home, $328,150 at 2.67% in 2020. Median home, $408,800 at 6.5% in 2026. Monthly payment went from $1,068 to $2,067, a $999 increase for the same house. Median resale home, $408,800 as of March 2026 per NAR. Income needed to qualify at 6.5% with 20% down, $111,252 per Redfin. Median household income, $62,600. The gap, $48,652 per year. 9 million buyers priced out since the 2022 surge per NAR. 24.3% of new borrowers who do qualify spend 30% plus of income on the mortgage, the standard affordability stress threshold per LendingTree 2025. If you want to see the real numbers behind the headlines, subscribe to the Data Desk and hit the bell so you never miss a breakdown. Miami rents up 53% since 2020. Tampa up 50%. San Francisco mortgage payments above $4,000. North Dakota average rent, $821. The city-by-city gap in this story is as wide as any we have covered. Part 2. Miami rents up 53% since 2020, from $1,725 to $2,645 per Zillow ZORI. Tampa up 50%, from $1,322 to $1,986. Both cities absorbed pandemic migration waves the supply never matched. San Francisco moved opposite on migration. Mortgage payments still exceed $4,000 per month on price and rate alone. Miami, plus 53%. Tampa, plus 50%. San Francisco, plus 35.1%. National average, plus 32%. North Dakota average rent today, $821 per month. Same country, same economy, rents moving at completely different speeds. North Dakota, at $821, exposes how much the national average is pulled by coastal and Sunbelt markets. Hawaii leads all states, $2,399 average rent. California, $1,844. The spread between Hawaii and North Dakota, $1,578 per month, $18,936 per year in the same inflation environment. Miami, $1,725 in 2020 to $2,645 in 2026, a $920 monthly increase, $11,040 more per year for the same apartment. The pandemic migration wave added 250,000 residents. The rent increase did not reverse when migration slowed. North Dakota, $821 per month. Iowa, $895. Arkansas, $901. The central U.S. holds 12 states where average rent stays below $1,000, a figure that has nearly disappeared from the coastal and Sunbelt housing map. The lock-in effect is the mechanism keeping buyer inventory frozen. 77% of California homeowners hold rates under 5% per California LAO. Current rate, 6.29%. Selling means replacing a sub 5% mortgage with 6.29% on the next purchase. So they do not sell. Inventory stays tight. Prices hold. 9 million priced out buyers stay on the sideline, competing for rental units and pushing rents higher. The two crises feed each other. Income needed to afford the median home, $111,252. Median household income, $62,600. The outer ring is nearly double the inner. That $48,652 gap is the wall 9 million buyers cannot clear. From 2001 to 2024, renter incomes rose 9% in real terms. Rents rose 30% per Harvard JCHS 2026. Lower income renters' residual income after rent, down 60% since 2001, to a record low of $210 per month. After housing, $210 remains for food, transit, healthcare, and everything else combined. Lower income renters, $210 per month residual after rent, per Harvard JCHS 2026, down 60% since 2001. That $210 covers every remaining expense, food, transit, healthcare, after the rent check clears. 77% of California homeowners, rates under 5%. Current rate, 6.29%. Selling means trading a locked, sub 5% mortgage for a 6.29% one. So inventory stays frozen, buyers stay out. Renters absorb the demand that has nowhere else to go. Rates need to fall below 5.5% before the lock-in math starts to work for sellers. 2026 forecast, 6.3% average, no unlock this year. Where rates, rents, and affordability go from here, and the number that tells you when the gap actually closes, is in part 3. One piece of genuine forward data. Monthly payment to buy the median home forecast to fall to 29.3% of median income in 2026. First year below the 30% threshold since 2022 per Realtor.com. Rates averaging 6.3%, prices rising only 2.2%, wages outpacing both. First marginal improvement in buyer affordability in 4 years. 2020, 18% of median income. 2022, 31%. 2023, 35%, the peak. 2026 forecast, 29.3%. Below 30% for the first time since 2022. The direction has turned, the level has not healed. 29.3% is still above the 28% rule, and that is for the median buyer with 20% down. 24.3% of new borrowers in 2025 spent 30% plus of income on mortgage alone. Nearly 1 in 4 new buyers in affordability stress on day one per lending tree. 488,000 multifamily units added in 2025, above pre-pandemic averages per Harvard JCHS. New supply concentrated in the South and West is already pushing rents down in those regions. The pipeline is working, slowly. Inventory up 8.9% in 2026, third straight year of growth per Realtor.com. Still 12% below pre-2020 levels. First-time buyers fell to 26% of all purchases, lowest since 2014 per NAR. Direction is right, gap has not closed. Property taxes and insurance are the costs the mortgage rate headline never shows. Property taxes up 27% on average from 2019 to 2024 per CoreLogic. Colorado and Georgia up 50+%. Homeowners insurance, national average, $2,466 per year per Bankrate, July 2025. That adds $205 per month on top of principal and interest, rising with home prices regardless of what rates do. Rent's up 32% since 2020. Mortgage payment, $2,061. Income needed to qualify, $111,252. Low-income renter residual after rent, $210 per month. Those four numbers are the American housing cost story in 2026. The 29.3% improvement is real. It is also one step down from a 35% peak, not a return to normal. Normal was 18% in 2020. Closing that gap requires rates at 4%, prices down 20%, or incomes up 78%. None of those are in the 2026 forecast. 29.3% of median income in 2026, first below 30% since 2022. Still above the 28% rule, still well above the 18% floor of 2020. Progress measured in fractions of a percentage point, not a return to the baseline. The housing gap opened in 2020 and has not closed. Rents compound, mortgage payments doubled. Income required to buy is 78% above the median. The question is not whether housing is expensive. The data settled that. Are you renting or paying a mortgage right now? Drop rent or mortgage in the comments, and we will see you in the next data file.